The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman back in the saddle. My pleasure to be back here. And it is August the 30th. We're just about to wrap up the month, so the monthly candle is going to be really important. A couple of new all-time highs coming up for this month. Will the Dow make it? Doubt whether it's going to make the 26,616 now. Might have to wait, but in fact, it's a very fascinating market as always. I think that's what keeps us all totally engrossed in the market, of course, besides making money. But always a challenge. The S&P is down 850. Probably, I'm being a little conservative. I'm calling this a leg C, probably a peak C today. 29.1750 is the high on Wednesday. Today being Thursday, a red candle. MACD strong, stochastics at 95% strong, on-balance volumes dipped a little bit, but up at the higher end. Relative strength has pulled back, but still up in the higher end. Daily chart, weekly chart. Is this going to turn out to be an instant restart? Chapman wave instant restart, that peak D to a peak E that had a higher low, and all of a sudden we're looking at potential F/B at an all-time high. Hey, let's go one step at a time. 120-minute chart gave that peak E in the Chapman wave at 29.1750. Short-term top, pulling back in. Not very severe yet, just a pullback. In fact, I haven't even covered that big gap-up candle of the 29th. So let's just give parameters real simple. 29.1775 either extends today's leg C. I can't see it happening today. But by tomorrow or Tuesday, I believe we'll go to new recovery highs. Now, the reason why I'm thinking this is more like a B than a C is if you look at the Dow, INDU, the Dow right now is trading at, it is down 105 at 26,016. Hit a high yesterday of 26,167. At this point, I'm calling it peak B. Maybe I should be a little more conservative, but I can't really be conservative here because that peak E that was made at 25,692 on the 7th of August dropped to 24,954. Remember, I was looking for a move down below 25,000. It gapped up after that. I did not hop on board until just recently. So we're all along. We're expecting at least one more high, but I think that this is there's a really good question in the den. A lot of people use the Chapman wave methodology. Is this a leg G? That would be wave number 7. You remember I decided decades ago not to use numbers, although it would have been the easiest thing for me. It just sounds so nice, leg 7, you know. Well, at the time, there was Proctor was talking about Elliott wave. Wherever you went on TV or news, whatever it was Proctor talking about the Elliott wave. So I decided he used alphabet letters, numeric letters occasionally, but for just certain things, and Roman numerals. I decided I'm going to make it simple. I'm calling them A, B, C, D, E, F, and G. You cannot get an H. G is the highest you can go to, and then you recycle. That's when, after that, sitting at one of those in the lounge of one of those ski resorts when my son was out there skiing, and I don't like cold, so I love speed, I love the whole outdoor aspect, I love sport, but I just don't like cold. So I'd go do a couple of ski runs down, probably sitting on my tush all the way down, but I would get into the lounge and I'd sit there. And that's where I really discovered this wave 7, leg D. And after that, I refined it that you could go higher. So 4 higher peaks is where other things can happen. Look at that peak D and peak E that you're looking at here in the weekly chart of the Dow. E, it was made back in January the 26th that week. And what a sharp pullback. So I'm always very cautious. We've made a peak E in the monthly chart. I've still not put a down arrow yet, even though we've had 9 months, no, 8 months, 1, 2, 3, 4, 5, 6, 7. This is the 7th month since that high. And I haven't yet put a down arrow because the MACD never crossed negative, and it never closed. The down never closed under the 9-period moving average in the monthly chart. Isn't that green line? Isn't that amazing? Well, okay, let's get into nitty-gritties. I believe there will be just slightly higher highs. I don't think we're going to 26,616 in this particular move. But what I am looking at, just to finish that thought, in the clubhouse, I used to have these huge books. I can't remember, there were a couple of charting services, and my partner and I used to get these books, and I'd take some and he'd take some. And I'd sit there in the lounge with a pencil and a ruler, and I'd be drawing all these lines and measuring all sorts of things. That's where I really started to do technical analysis in great detail. That's where I discovered the Chapman wave methodology and refined it ever since. Okay, now back to our story. So I believe that that's not a short, that's a long. I don't know why I put in a short. That is LONG. All right, so much for that. All right. What we are looking at is that there's a really good chance that we make nominal new highs early next week. We come back Tuesday after the long weekend. If this is a B, you cannot get a C until tomorrow, Friday. That's above 26,167. Then you'd have to wait for a peak C on Tuesday. Then you'd have to get a leg D on Wednesday, and then you'd have to get a peak. So I think it's all of next week is where I'm looking at this whole thing unfolding. Sometime towards the end of the week, I think we make some kind of a double top in the Dow. We make an S&P. Here we go with all the numbers. S&P is down 8. It's only down 8. Dow's down 105. The S&P is much better, minus 2.8, whereas the Dow's minus 0.40%. Hey, I like that. The 30 Dow stocks are acting a lot weaker than the 500. I mean, isn't that much better? So S&P starts a leg. Now, here again, I'll be very conservative. I've called it a D. Everything about this says it's probably a B or a C. I'm just trying to be as conservative as possible. The stochastic's flat at 95%. That's really good. The MACD is good in the daily, weekly and monthly technicals. MACD is strong. Stochastic in the monthly is okay. It's rounding, but it's really the weekly that's at 93% and very good. So I'm calling this an F. There is a chance that we have a pretty sharp pullback after next week, and yet it's not a pullback that is so deep that it negates this peak D's low of 27.95. I shouldn't have said that. That's kind of tempting the technical gods. Anyway, that's what I'm looking at. There will be some kind of a pullback. Maybe it's deeper. I'm not sure yet. And then we'll have to see whether this is an F. If this is a peak F, then you will go down and test the 28.11, 14-period moving average if there's a sharp pullback over the coming 4 weeks into well, late September, maybe October. We'll see. All right. So parameters to watch short term, 29.06 right now, 28.95 is pretty good support. 28.93 is really good support. But I wouldn't be surprised if we sneak somehow or other, we make a new recovery high by tomorrow or Monday or Tuesday. That's the S&P. Wow, I haven't got to the other guys yet. All right, I'll do them all. We'll be back. Basil Chapman, Tiger Business Hour. I have to get you. I've already got a whole bunch of emails. I'll try to get to each one as we move along. Let me just, I got them. There we go. The Dow is down 100. S&P is down 7.8. I'll be right back. Basil Chapman, Tiger Business Hour. 779276648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. We're back on the Dow's now down 98, S&P's down 6.9, and we're going to go to the Qs. But before I go to the QQQ, which is not the Power Shares, it's the Invesco QQ Trust Series, I'm going to remove that. And I'm going to go straight to our caller, John in Philadelphia. John, how are you?
Basil, I'm excellent, and thank you for coming on to do the full show here this week.
My pleasure.
I wanted to pose a very specific question to you on the QQQs and the NVX 100, and specifically this. First, an observation. We're in just an immensely powerful bull market, and we're making new highs, and a rush to new highs led by Microsoft, Amazon, and Apple stock has been occurring since last Thursday. My question is there anything that you look at in your work, whether it be your Chapman Wave analysis of the price patterns or other things that you look at, of course, which are many, are any of those things suggesting to you that what we're seeing right here in August and this last week in August is a crescendo of panic buying, get me in enthusiasm that conceivably sets a high of some sort, or not? That's my very specific question.
That's a really good question, and because I took a break, while I was at the beach, I was remunerating the different aspects of the market that made it so easy for anyone. I mean, years and years ago, back in 2010, I remember talking about this and saying that if anyone was interested in, say, putting in money for a college fund, this is probably the move that is the best type of move coming, because it would be a move that we have specific icons that would be able to identify, and those identifiable objects would be things like skyscrapers. It's inevitable. It's never changed. as long as I've been looking at markets, you've always had something that said, whether it was the Petronas Towers in the 1990s in Malaysia, that you saw the top right there when the Petronas Tower was finished, whether it was the Burj Dubai, which had to change its name to Khalifa, back in, that was in, I can't remember what year it was, but they had to close the market because there was a crash going on in the real estate and in the financials. They changed the name. They closed the market for a week and then opened it, and that was a crash of major proportions. And it seems to me that until we get this aspect where there's almost a competition for the world's tallest building, and I'm still not sure that it won't be some kind of, even if it's just a statement here in the United States, just as there was in March when in Chicago the world's tallest building was shown in the cover of Popular Science, and it was a building that was going to be built. I'm not sure if it was 6 Dearborn or that was the one that came in 2008, neither of which were ever built. I think we have icons. So in that regard, the big question is going to be, are the Amazons, the Googles, the Facebooks, are they going to, is the structure going to be the same going all the way to the top? Well, while I was away and I was just thinking about all these different aspects, I said to myself, you know, this is fascinating. This is probably the most, I wouldn't say hated, it's probably the most ignored major bull market we've ever had. You know, if ever there was a place that you would expect CNBC to be on in the TV in the lounge or whatever it is of a resort, there was nothing. Nobody's even talking about stocks. So I'm looking at this and I'm saying this is a stealth mega bull market. When it becomes something very well known, where everyone is talking, as in 2000, when they talk about the NAS like it's their best friend, not realizing that the stock market is never your best friend. It is something to negotiate, something to respect. You don't put your arm around and say, my friend, the NAS. Doesn't work that way. So when I'm looking at this and I'm looking at the steady move up in the QQQ, and I think this is going to go to your question. When I look at the steady move up, if I look at Fibonacci expansion, with the next expansion being at about, excuse me, 200 and what is that? 61 in the 261 in the QQQ series. I'm looking at this and I don't see any parabolic move at all in the weekly chart, in the monthly chart. I'm starting to see it in the daily, but not the weekly chart. It's just a very steady move. The MACD's rising. Stochastic still, after pulling back sharply, still only at 86%, still has to go to the 97, 98% area. I'm looking at this and I'm saying, this is a very well and very nicely disciplined market. It's just broken out in the weekly in leg E. The daily is in, I'm calling this leg C. I'm being a little aggressive. It should really be a B, but I'm talking about it as a C. And the MACD is good. Stochastics at 97%. I might be totally wrong, but I still see enough strength in the daily chart to run into next week. To get to a D or an E, because we come back on a Tuesday and we're only in a leg C right now, that means tomorrow you'd have to have no new high for a peak C. On Tuesday, you'd have to have a new high for a leg D, and then it would take you to Wednesday for a peak D. And if the Dow is still only in a B or a C and still has to go to a D, and the NASDAQ is actually leading, I wouldn't expect the NASDAQ to complete its move before the Dow. So I'm looking at this and I'm saying, shorter term, very good. Now, in a measurement of, how can I put it? What you would like to say is, are there readings that I'm looking at that tell you that it's becoming extremely overbought on a sentiment level? And I would have to say to you that if you look at an Amazon trading right now at 2020, just walked its way through 2000 as if it was nothing. Leg C, MACD is good, Stochastic's good. I suspect that any pullback in Amazon, even if it's deep, it would have to really break under 1,700 to say to me, uh-oh, something more serious is going on. So let me give you parameters. And what I would say to you, I'm not going to give you upside in Amazon because there's nothing that I can look at other than Fibonacci numbers and stuff that might be meaningless. Let's just say that the upside at this particular point, yes, it should be able to stay in the 2000s all the way into next week. It's the downside that I'm looking at, and the three candles that I'm looking at is the candle of the 28th. That's just 3 days ago, trading at between 1941 and 1928. Oops, I don't want to mention the number 1928 because that was significant since 1929. The Labor Day weekend of 1929 was the all-time high at that stage at 386 in the Dow, dropped to 40 two years later. So I'm looking at this, and I'd say that 1920 to 1880 is probably the area of key support for Amazon. And I could go through each one of these, but as I'm looking at it now, it's going to take a really big... Can you hold on through the break?
I'm going to hang up.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. I just wanted to, I was talking to John from Philly just a moment ago and looking at the aspect. I was talking about the monthly. Let me show you what I'm looking at. In the E-mini, we've just made a leg D and now it's a peak D. This is a 2-minute chart, right here. You see the MACD is strong, stochastics holding at 87%, getting a little toppy. The 200-period moving average of 2909 is kind of the I call it a cap right now. It needs to break above it, but it's a resistance. And the 29.06 is pretty good support. All right, now we're looking at that. That's the 2-minute. Let's think of that as a 120-minute chart. Now we go to the 5-minute. Let's think of that as the daily. We've made a peak A, B, C, D in a very short period of time. Usually the quicker you go to peak A to B, C to D, and especially if it's in just a short distance higher in the height, then you can expect some kind of pullback, but it's saying we're on our way trying to move higher in a stair-step way in a very organized method. So now we're looking at this, and I'm saying, well, the MACD is running strongly. The stochastic is only at 68%. It needs to get into the 80% area to really hold. But if there's any chance of getting to 2908.50, no, 0.75, then that 2909.75 200 period moving average in the 5-minute chart becomes a target. In the daily, in the 2-minute, it is 2909, right? So we go step by step, and I'm going to explain what I'm doing right now. And the weekly chart, which will in this case be the 10-minute, is only in leg A. So what have we got? We've got a mature daily. We've got a fairly mature weekly with improving technicals. The technicals of the daily are really holding. This is now, remember, I'm doing this in the short term, the 2-minute chart. Think of it as the 120-minute chart. And it's saying, yep, I've already done it. I'm the rudder, but I need to now consolidate these gains. So be a little careful. And that's going to impact the weekly, which is at a peak, a leg D, but holding very nicely and doing it in a very methodical way. But it does say that under 2906, it's a real problem both for the 2-minute and the 5-minute, 120 and the daily, remember? Now the weekly chart says, hey, wait a minute. My MACD hasn't even crossed positive. The histogram is still negative at 0.03. It could go green, and that'll be a good sign. It hasn't done it yet, but everything's moving up. It's stochastic. So now look what we're doing. Daily, in the middle, holding very nicely. It is sort of captured by the 2-minute chart. And if the 2-minute chart starts to rally very sharply, which I think it's going to do, that's going to really help the weekly chart, because the moment you see 2908.50-ish, that 200 period moving average becomes a magnet. Now all of a sudden, if you've done all of this in 1, 2, 3, 4, 5, 6, 7, in 70 minutes, you've been steadily moving higher. It's saying 2906 is now absolutely key in all time frames, especially the monthly, which of course in this case is the 10-minute chart. And if it manages to get to 2908 by the end of the program, sorry, 2909 I meant to say, that's very good. That's saying we might have made the low for the day, might have made the low for the next 2 days. That's the way I look at it. Now I'm going to go back to what John was talking about in the monthly chart. I said Amazon, look at Google. If you don't mind, I'm looking at GOOG. Daily chart. Let me move this over so you can see what I'm looking at. Made a peak E right there on the 27th at 1273.89. Pulls back to under 1200, and the next thing you know, it's gone peak A, peak B, leg C, all underneath the previous high. So in a way, that's a positive. A, B, no, that's the same. Those two highs are the same. 21.28, 21.65. Yep, that's B right there. And now we've gone into leg C. And all of this is occurring underneath the previous high in Google, trading at 1250.54, up $1.24. So what I am looking at here is that Google is saying it's a little bit, it's getting a little tired. It's working very hard. It's not going very far right now. The weekly chart is still very good, but it hasn't taken out that candle high that I mentioned before, the 12, what was it, 70 something? 1267-ish. So I'm looking at this and I'm saying, this is the microcosm of what we were looking at. Well, this is macrocosm of the 2-minute, 5-minute, and 10-minute E-minis, but in a sense, that monthly chart is still a captive audience to the daily, and the daily is holding very well. It hasn't gone to a new high. Monthly chart says, hey, there could be a double top. Peak D just sneaks above there to go to an E, goes toward just on or just over the previous high. And what is that in the monthly chart? I'm calling it F for now, but just going to recycle because the MACD and stochastic are still pretty darn good. So that's how I'm going through all these different charts. Now let me get to a couple of questions. QQQ, let me just review it one more time. At 187.24 short term, there's very strong support at 186.20 to 185.70. I think it's going to go higher. I think the 188 is a target right now for the next day or two, and it's broken resistance on the weekly chart, but the week still has a day and a half to go. So that green line there, that Chapman wave inside track repellent zone, it's above it very nicely. The week is young. We still have a day and a half to go. But so far, that's good action. Leg E in the monthly chart, MACD and stochastic. MACD is very good. Stochastic's improving at 86%, and the on-balance volume is very good. So that's how I'm going through these. If you look at the IWM, let's move on now. IWM at this particular point is at a leg E. My last night, during the night, thank goodness it was last night, because if it happened while I was away, it would have been a problem. I had some electrical something, I don't know what happened, but my program shut down, so I probably lost some data. But in the meantime, back at the ranch, G/C in IWM made a 172.94 high, 172.94 high, 94 high, 4 days ago, and it's trading in this rectangle formation. I think it's going to sneak a little higher. I think it might even go above 124.94. But in the meantime, that monthly chart is still very strong. It's above this long-term, very long-term trend line resistance, inside track repellent zone. Look at that. Goes back to 2011. And that was in May, I believe, at 86.82. And it keeps bumping into this resistance, and we've just snuck above it. That is really good action. So the IWM, the Russell 2000, is acting very well. Here we go. We're going to look at the gold. Gold right now was down about $4. Now it's down $7 at 1204.40. What a struggle. I mean, really, that monthly chart says what a lot of work it's going to have to do to make a decisive upturn. It's going to have to start in the daily. The daily at 1204 right now needs to get to 1235. It needs to close in the 1235 or higher area within a week. And if it does that, that's good action. And the weekly chart will improve 1227 and 1244, the moving average resistance area. It might have good support, but it really isn't moving. It should have taken the dollar pullback. Dollars pulled back from 96.98 to under 94.50, and now it's trading at 94.85, trying to hold the 9-period moving average of the weekly chart. This is the Chapman wave squat leg formation. If there is a buy signal from here, it could be quite sharp. That'll impact gold. So we're going to watch this very close. I'll be right back. Dow's down 82.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back. So what I'm looking at here is the IYT, which is the Russell 2000 at 204.40, down 94 cents. You see this? This is Chapman Wave Automatic. There's automated projections, resistance and support. 204.89, 207.37, strong resistance in the daily chart of the Russell, of the iShares Transportation Index. 205.10 to 207.75 in the weekly chart, and a whole chunk here in the 200. What is that? 200, 202 area in the monthly chart. It's gone above that, and the 120-minute chart is 207.01. You can see there's a lot of resistance. So the question I had here from GT was, UTX is down. Let me just do that. So UTX, hitting right now, real long UTX from the 119s is 132, hit 136 just a few days ago. Yeah, it's pulling back. I think there's a lot of resistance. And it should still hold quite well. And that's what I'm trying to anticipate for subscribers, that this is one of the stocks that regardless of how deep the next pullback comes in the market, we will just be adding to UTX because it's going to be a leader for the next move. That's what I'm thinking, is industrial start to come on strong. Triple M has already started to move very nicely. Look at this, up 23 cents today. Struggling, absolutely, made a high in the 259, 260 area. Beginning of the year, plunges down to the 190s, and here we are at 210. It's struggling, but I think there's a chance that the big rotation will come when, out of the blue, there'll be tariffs, there'll be taxes, there'll be talk of the president going up against some of these big guys like the Amazons and Googles or whatever it is, and all of a sudden they will have a timeout. And as they have a timeout, the IBB, which is we are still long the IBB from the 110 area, is at 122.11 in leg C. This is what's happening is fund managers are saying, hey, we're going to go back to all our favorites. And the favorites has been the biotechs. And I think that that's working right now. Will it work on the next pullback? That's going to be the big test. But so far, it's doing very nicely. And I think that this is the way you have to look at the market. What a fund manager is going to bolster and to buoy by saying, hey, we don't want to take too much risk. We want to know what's working. We want to stay with what's working. And I think that's kind of what we're looking at here. And that's the reason why I think that when the what's working starts to be the not what's working, like the FANG-type stocks, I think that they're going to go into the more industrial type things. This is my thinking right now. It might change, but that's what I am looking at. Now, next question I had was, where did it go? Right here, Sarah. EEM, yeah, EEM, I think there will be a time and a place. Now, I'm going to do a study for my subscribers. I haven't planned it thoroughly yet. I've just been thinking about it. I haven't been in a big rush to get to a webinar. I think it's time. Right now is time in the next pullback. And I do believe that from next week, there could be, based on the Chapman methodology, we could be running to a top very soon. And we'll see which in the sieve, we'll see what stays, what holds, and what falls. And that's going to be very important. And EEM is a little bit like Triple M. I think it will come on strong. I think that there's going to be there's going to be a type of market that says Chinese are buying American stuff and Americans are buying Chinese stocks. I'm talking about stock market. And it's all around India. They're buying, everybody's buying it, and the United States will lead the move to the upside. I think that that's coming. Boy, I could be so totally wrong. I believe that's coming. How it unfolds is going to be the big question, and it'll be a world market. I mean, we're going to be looking at when the big crash comes in a few years' time, or whatever it does. You won't even know. You remember back in we don't remember because we weren't there. But in '29, when the crash came, you saw people outside the stock market with signs and their cars saying, "Buy, I need food for the family. Buy my car." But in the case of the internet, you won't know which people are broke until banks start foreclosing on houses and stuff. That's going to come. I'm sorry to say. That's going to be the big crash. That's what it's going to be. It's going to be the quietest, most deathly crash that we've ever experienced, because it's going to involve people where you don't even know that your neighbor, you don't even know that your kid or your whatever it is, was trading the market and it leveraged to the hilt. All right, enough with that. Let's get back to the market. So the question is EEM. Yes, not yet. I think EEM is going to come on strong. Maybe in this pullback in EEM, the iShares emerging market holds quite nicely. It's 43.13 right now, down 97 cents. If it holds and doesn't break 41, close decisively below 41 for a week, that's going to say, okay, next move could involve the EEM. Let's go to Vail. Oh, you wanted a couple of questions there. Okay, Vail, SA, iron ore, trading a peak D in the monthly chart has 1247, 200 period moving average support, and about 1230 is the 9 period moving average support. No, is the 14 period moving average support. Just chop. Look at this, weekly, just chopping around in a trading band. I would just say it's trading at 1322. Like EEM, I think it's going to pull back. If you can see it between 1285 and 1240. Give me a yell, ask me what's going on. Let's see, because that could be the lower range where it starts to move to the upper range. It could just be a trade going from the 12s to the 14s to the 12 to the 40s. It could continue doing that for a little while longer. That is also what I'd like to look at if I was looking at copper. Copper's holding quite nicely. Peak B. Okay, so they're all doing pretty much the same rally, but this pullback and where they are on the weekly it makes a big change. So copper trading at 2.71, must hold 2.65 over the next week. If it breaks into the 2.78s, that's good action on a shorter term basis. Okay, I hope I answered those questions. Crude oil, yes, let's look at crude oil. Crude oil was running nicely. It's up 39 cents, 69.90. Leg D, remember I spoke about this before I left last week. I said USO is looking great. I think it's going to move higher. And Fred sent me an email. Fred did GAN structural work, did fantastic work, and really pinpointed that move. Fred, congratulations. That was a fantastic call on crude oil when it was down in the 64s, trading 69.90 right now. But I think it's stuck in a range. So the crude oil contract, I wouldn't buy it right now. Leg D, good technicals. I want to see how it pulls back and can it hold 68.50, 68.30. That's going to be key for me. GT says Boeing. Yep, Boeing is in that trading band, just stuck down today, $1.44, $348.75. I just think it's stuck. And I wouldn't be surprised if Boeing isn't one of those that really rallies strongly in the next big move up. It just slowly goes to lower lows and lower highs. With Raytheon, oh boy, I said Raytheon. Let me see where the Raytheon is. Yeah, look at Raytheon. Peak F in the monthly chart, peak F in the weekly chart, stuck in a range. And I would just say above 210. Raytheon's looking quite good, but it's trading at 198.70 right now. I think it's going to test the Chapman Wave Roman candle low of the week of the 27th of July at the 186 area. I think Raytheon's going to go lower. That's my opinion. We'll see. PPA, okay, PPA, well, that'll be the same thing. PPA is, in fact, the Power Shares Aerospace and Defense. It's because it has the whole amalgam of the, it has GD, it has Boeing as well, but it also has Raytheon and some others. I think it's holding a little bit better right now, but I would not be surprised if at 59.30, in 2 weeks' time, it starts to trade towards the 58s, between the low 58s. I'll be right.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up. Then you got Dave White. You got Tom O'Brien again. Being Thursday, I'll be interviewed by Tom O'Brien later today at about 4:20 Eastern Time. So we're looking at the Dow. Look, you have those shorter term. Look, the 2-minute chart broke out. Chapman Wave inside. Chapman Wave. There you are. You've got an instant restart, AB. Now this is C. This is very good action. And you've got the weekly, which is the 5-minute chart in leg E, and you've got the monthly still in leg A, but showing signs that it's about to make a peak A in the next 20 minutes. Nice action. Dow's now down only 72. S&P's down 4, and the QQQ is in fact up 16 cents. Nope, that's the wrong one. QQQ, I can't even see. Oh, QQQ is up 64 cents at 107.30. I like this. This is very good. And as I say, we have only long positions for my subscribers to my opening call. We've still got the UTX long. We've got the IBB long. We've added another one that we've got in the financial sector. We're looking at the Dow. We're along the Dow, and I'm anticipating that next week we start to see some kind of toppy action, and that toppy action could be, instead of the 5 days that we just had, that one could turn out to be quite a few weeks. And I'm going to be watching it real closely. So in the meantime, we're long, and we're looking to probably go short next week. But in the meantime, right now, just be very selective. If you love the stock, you've been waiting for it, put in a price under what you'd normally be expecting. If it comes in, take it, put in a stop, let it run. If it's a good stock, it should rally in this particular, going into next week. So with that said, I didn't finish because I didn't look at the TLT, and the TLT at this particular point is going to be a clue. Remember, I like to look at the TLT and say TLT very often over the years when money comes out of stocks because the equities are getting too volatile, they go into the safety of bonds. But in the meantime, the TLT is pulled back from peak E. It's at 121.17. Only if the TLT starts to break above 122.70 will you see a very sharp decline in the market. At this point, I think the TLT is going to be pulling back a little bit longer. Next week, we could start to see a test of the 200-period moving average in the weekly chart of 122.25. It needs to clear that decisively. We aren't there yet. Watching it very closely. Hey, nice to be back. Have a great day. Check out my opening call. Hopefully it'll be profitable for you. And see you tomorrow. I'll see you with Tom a little later on. Have a great day.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.